please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's now get more fundamental analysis of all the stocks that are on our radar. Harendra Kumar, Head of Institutional Broking and Global Economy at Elara Capital, joins us now. Good morning, Harendra. Thanks much. First up, what have you made of the finance numbers that have come in? We had DCB, we had Gruh, and of course, we had ICICI Securities. Your take on the numbers so far?
See, fundamentally the sector is going through a flux, and all the three names that you mentioned are fundamentally different nature of businesses. So DCB is just coming out of the huge, capex over the last 2 years. ICICI, of course, is a clear good franchise, and Gruh actually, where the numbers were very good. So I think structurally, on terms of housing finance companies, I think the outlook is very strong. As Mr. Chokshi indicated, 25% growth is no mean achievement. And our channel checks on the PMAY and credit linked equity scheme is very, very robust. So my guess is housing finance companies, despite the stress on spreads, will remain structural long stories. But overall on finance, I think we are very worried about the larger private sector banks because of the over ownership of this sector. And clearly there are headwinds coming in. We did speak in the last interview on why the crowding of so much of money into financial stocks is a risk to the sector per se. So my guess is that in terms of the overall private sector or some of the other financial sector, we are going to a prolonged underperformance on the financial side.
Okay. Harendra, hi, good morning. I also wanted your thoughts on how to approach Infosys now after the stock has sort of gained 25% in the last 6 months and the fact that margin guidance has been scaled down.
So clearly the value drivers are not working for Infosys. They will remain in restructuring for some period of time. So our rating is reduced. But overall on the space of Infosys, on the tech space, we're turning slightly positive. I think in our space, we like TCS. I think this series under ownership of the stock. And if the margins hold up and the margin profile or growth guidance is better, I think the stock will relatively outperform its peers within the space out there, because a lot of mutual funds are looking at the relative trades. Mid-cap tech looks interesting. I think this story has some time to run. So overall, yes, tech could be a relative outperformer to a lot of the other sectors. Within that, I think it's TCS which should be the one that one should opt for.
Actually, as you speak, Harendra, the SGX Nifty has taken a bit of a knock, down 0.7. And Hang Seng is now down 1.57. So clearly the Asian markets are taking perhaps the attack big, not so much Nikkei. Nikkei actually is the outperformer today. But the other markets are clearly going from weakness to weakness. How are you looking at the markets generally? This level at 10,500, are you comfortable buying? Or do you think they could hit a roof here?
No, Lata, actually, if you put the framework in place, first and foremost is the equity markets are volatile, but some of the currency markets or fixed term are showing contradictory signals. They are quite stable, actually, which means that they are not reading too much into this overall, noise about trade wars, or for that matter, this attacks or, something beyond that. So S&P is holding up, Nasdaq is holding up. So my guess is that if the noise on these subsides, the markets have upside risks actually. So I think they've held many decent support levels, and they would, as the volatility on the equity market subsides, the markets could tend up higher. My guess is over the next 3 to 4 months you could test our previous highs as well.
Okay. What about some of these pockets that have done very well this month? So NBFCs, for example, of course, we discussed the results, but apart from that, some of the larger names like Bajaj Finance, Indiabulls Housing, etc., have done very well this month. Would you put any additional money to work here?
So like I mentioned, in the terms of the financial space, we'll be a little choosy. There are a lot of opportunities beyond the financial space that are are part of the reflation trade. For example, metals. I think metals is something, because of the given volatility, people are still not looking at it. But I think one should take cognizance of the smart bounce back in Hindalco or the LME metals. Even in fact, today as we speak, the metals are on the higher side globally. So I think the metals trade is still a long way to go. It's seen an intermediate correction, but I think the fundamentals are very, very strong, and we should look at a sustained rally over the next 2 to 3 years.
Okay. Finally, Harendra, you know, you said that you expect the recent highs again, all-time highs. What would be the leaders of that rally?
You know, TCS is one index heavyweight that we spoke of. I think Reliance Industries will be an alpha generator market, leading for that matter. It's also lagged some of the other outperforming sectors over the last 6-7 years. And then you will have metals. I think between these 3 or 4 names or spaces that we've spoken, the index could, you know, have enough legs to go up to the new highs.